Good afternoon, good morning, good evening, everyone, and welcome to Diary of a Trader. This video today is going to go over short selling in the stock market. All right. Now, short selling is very it's so natural if you're talking about futures markets or if you're talking about the forex market. You know, anything really kind of like a derivative market. Shorting is very easy. If I want to short the S&P 500 futures contract, which is there's the E mini and now the E micro, the ES, you know, if I want to short that, I can go short as easy as I can go long. And what I mean by easy, and I think that's going to make more sense here, for those of you who have never shorted a stock in the stock market before, who have only ever had experience shorting in forex markets or futures markets, I think you're gonna have a little bit of a heart attack when you realize how easy it is to short in those markets versus the stock market. All right. Well, first off, we need to know that there is kind of a difference between shorting in forex markets and the stock markets, okay? Because stock is something that is a limited supply. It has ownership, okay? If I have a stock of Microsoft, all right, that is mine. I own it. I have a part of that. It's property, okay? You know, it's kind of the same thing when you buy foreign currencies. You actually own the currency, but you know, futures markets, you don't have property. You have a right to something, but it's not. You don't have property. All right, you own, and it's an asset, a stock. And so when you're going to short it, that basically means you're selling something that you don't have. Okay, you are betting on the price of something dropping. That's what you want to capitalize on. Okay. So how does this process work? Well, first we have the broker. Okay. The broker is the guy that we need to visit with because he's the first one who shows up and is going to really like facilitate this move. And it's a very interesting process, okay? So here we go. We've got broker, short seller, and then the market, okay? You are the short seller, or I am the short seller, okay? It's a multi-step process. So the first step is if I want to short Microsoft, I need to, and I don't have it, I need to borrow it from someone. So I borrow it from the broker who actually borrows it from someone else, okay? If you have a brokerage account like with TD Ameritrade or Charles Schwab, you are also allowing people to borrow the stock from you if they want to short something that you currently have a long on, okay? There's a catch to this though. There's a benefit for the person borrowing, and there's a downside for the person shorting. Okay, so I need to borrow the stock if I want to sell something. That's step one. So I get it from the broker, and this is a very fast process that happens immediately. Okay, step two, the stock that I'm shorting to borrow is immediately sold at the market. Okay, what I mean by that is, let's say I want to short Microsoft and it's worth $100. I'm borrowing one share from someone else, from the broker. I sell it at the market. I now have $100, okay? The third step is what happens is, let's say the stock drops down to $90, okay? I buy it back, all right? So I buy it back at $90. I had 100. The difference is 10. So I made $10 on that short sale. And then what happens after that is, oops, I'm going backwards there. I mean to go forwards. The next step, the last step, is step 4. The borrowed stock is returned to the broker. Okay, and so this is all seems like a long drawn out process, but you know, these days it's actually a very fast process. There's actually kind of these old school rules that exist that says you have to excuse me, that you have to have physical delivery of the stock that is sold. There's something called naked shorting in the stock market, and that is when brokers allow individuals to short instruments, real stocks, without actually having the stock to short. Kind of probably one of the more famous examples of this is Overstock.com. The CEO has accused short sellers of naked shorting it. And there's been people and brokers and individuals who've gotten in trouble for colluding to naked short things. So, naked shorting is a huge deal, especially in the stock market, because we're dealing with an environment where there is a limited supply of stock available. And so 1 + 1 always has to equal 2. If 1 + 1 all of a sudden equals 4,500, there's a problem. Okay. So again, step 1, if I want to short Microsoft, I have to borrow it from the broker. It gets sold at the market immediately. It's just like what you would do with a Forex pair. If you short it right away, boom, that's what you shorted at. But instead of just getting the difference of the move, what I get is I actually get physical cash in my broker account. So if I sold it at the market for $100, I have $100 in cash. All right. How I make money on this is I want to buy it back when it drops in price. All right. If it drops down to $90, I sell it at the market, and I get the difference. I had $100. I bought it back for $90. I have $10 left. That's my profit, and then it gets returned to the broker. There's a little bit of a catch to this because you don't get to do that for free. All right. This is what makes shorting stocks kind of a pain in the butt. Is first, there may not be stock for you to short. There may not be any available. You may only be able to have some of it to short. There's sometimes a line of people wanting to short. There's fees attached. Okay, so the broker will charge a fee. That can vary, and it's also depends on the stock, depends on the time of day, year. I mean, there's a lot of things that go into how much it costs, and then the person who you're borrowing it from. People who have the stock already. So let's say somebody wants to short Microsoft, but I have it and I'm long. I'm like, well, why are you betting against me? You're going to have to pay me a premium for this, okay? So you get a little bit of a premium for allowing the stock to be borrowed. So like you're making money on something borrowed. You're basically making a little bit of interest on a loan, so to speak. So when you short, you have to pay a fee to short. And then there's also you have to pay, for how long you hold it. Okay, so sometimes you have to pay for how long you hold. So people who hold short positions for a long period of time, if there's a dividend, so a pretty famous stock that gets shorted, used to get shorted a lot, is called PSEC. It's actually one of my favorite dividend stocks. Prospect Capital, they issue a monthly dividend. Now, you can see down below here where the D is that's a monthly dividend, and it's of 0.06. So 6 cents for every share is their dividend. It's issued monthly. If you are shorting a stock that has a dividend, you have to pay the dividend to the person who is holding the stock, who you're borrowing it from. You have to pay that dividend. So there is kind of a secret little a happy feeling. When you get paid a dividend and you think that people who are shorting something that you're long on, they're having to pay you not only a fee, but they're having to pay the dividend to you as well. That's something to think about. But, short selling, again, why would you want to do it in the stock market? Because in the stock market, when things fall, they fall hard and they fall fast. And for instance, if we're looking at PSEC's chart right here, this is a pretty swift fall, and it's just like shorting Forex or in futures. If we want to short, let's say we enter a short at $9.08, and it drops down. This is a simple calculation. Let's say I wanted to short 100 shares at $9.08, so 9.08 times 100. Means it costs, if I sold that, borrowed those shares from someone, now I have $908. Okay. If it drops all the way down to $5.93, multiply that by 100, I'm going to buy that back. I'm going to buy those shares back that I borrowed. Okay. So I'm going to buy those back for $593. So I'm going to subtract 593. And then, subtract maybe $50 or something like that. There's my profit, $265. Okay. That is shorting in the stock market. Well, I hope you found this video helpful and useful, and I look forward to speaking with you in our future videos.